Hello, this is Brian Shannon speaking from Alpha Trends Blogspot for the World Cup Advisor. Today is Friday, November 3rd, 2006. And let's go ahead and do our weekly review of the market and the accounts that I'm trading, the equities 25 and under, and as well as the options account. The Nasdaq 100 I've got on the screen right now, and you can see that the market's starting to show a little bit of signs of tiring. On my blog, I had mentioned that a lot of these little stocks have been really moving rapidly lately, and some of the bigger momentum names have been breaking down, and that's kind of given me reason for concern here. Now, if we look at for instance, on this NASDAQ, if we look at a 10-minute chart, you can see that the last few days we've been tracing out this head and shoulders top. I've been looking for the market to come down to about $41.60 here on these Qs, and we got that today. So I think that near term that the selling is behind us. We're due for a little bit of a bounce here. We got this, this level of support tested. If you take a look at the height of this head and shoulders pattern, though, what it actually traces out to is down to $41.30. The 41.60 though is the level I've been looking at because it's been important support as well as this resistance prior. So we've got a successful test for now, but what we have to be aware of is the market setting up a shoulder, a right ahead, and then maybe another right shoulder over here. If that's the case, then we could see a deeper decline, maybe of about $1.40 from there, giving us a target of about $40.20, which would bring it down to test that 200-day moving average as well. So there's still a lot of reason to be concerned here that maybe the market is getting ready to shift transitionally. Objectively looking at the market, though, it's still in a very healthy uptrend, but I think that uptrend is tiring. The biggest reason for concern continues to be the semiconductors. The semiconductors appear to be breaking down. Now, I've been focusing on 3270 as the more important level of support. That breaking below there, I think we're going to see a failure of these semiconductors down towards that 31 level. So there still remains danger in here. From this failed move, often comes a fast move. I think we'll probably see, though, another bounce up towards this, 33.5 level and bring in some more longs before the market really does decide to drop considerably lower. So we've got to be aware that the semiconductors are a very important group, in particular to the NASDAQ. And if you take a look at the mid caps are giving me reason for concern as well. I had been, very enthusiastic about this group as they broke past this level of resistance and then past the 200-day moving average, and then, past the resistance from late June as well. Now, though, we're seeing this pattern of higher highs and higher lows interrupted. We've got a lower low. Now let's see, is the market going to make a lower high? Because if that's the case, then what I was talking about a couple months ago, which was this bearish flag on the mid caps, which we got more bullish when it broke out past there. But if this move in here traps in buyers, then we could see, I think, a significant decline in the mid caps. So I've been taking it kind of slow here in the market. Like I always say, I think the defense wins the game. As far as the equities account, I was involved in some ASTM this week and got out of that, took profits early on. And besides that, there were really only two other trades. One was SIGA. I was looking to make lightning strike twice in there, and took a very small loss in SIGA, as I thought it was starting to get moving here, and then it failed, so I took a small loss. And yesterday, I got involved in this MVIS, which happened to make a real nice run. So there were some good profits to be taken in MVIS. And for some reason that chart's not pulling up. Okay, so we see it here. But anyways, that stock, did break nicely, and took profits in there. So now that portfolio is 100% in cash. The only remaining position that I have open is the puts that I had bought actually a couple weeks ago back in here in shares of Dynamic Materials, symbol BOOM. And the company reported earnings. The response was what I was hoping for, somewhat. I was hoping that the stock would drop $10 or so. Instead, we had just about 2.5 points pullback from that. But we've got a declining 50-day moving average, which is also below the 200-day moving average. The weekly chart still looks like something could really go wrong in here. If we take a look at this trend line, we can say that Is it broken? Is it breaking? It's tough to say. Looking, a little bit further back in time, looking at a monthly time frame, you can see that it looks like it's peaking here. So I haven't covered any of those puts because I think that the sellers are still going to take control here and really push this thing, continue to push it lower. Here's the gap on those earnings on an intraday time frame. Now, for the last couple days, we've been seeing that the stock had a little bit of a bounce yesterday, but now it's starting to break back down again. So hopefully this boom can just completely fall apart. Maybe Barron's will do a hatchet job on them this weekend. I don't know. We'll see, but thanks for listening, and I'll talk to you again next week.